Hi guys, hello everyone. Really excited to start this webinar today. Welcome to another episode of eToro Popular Investors Playbook. I'm Shani Blackman, a client relationship manager. Thank you for joining me today, joining us today. We have an exciting guest with us, Jain Kongsted, also known as CPH Equities. Jain is a former elite chess player and now an elite pro popular investor at eToro. We're thrilled to have him with us today. Let's dive into his journey and insights. But just a quick note before we start, make sure to subscribe to us, to follow us and like us on social channels and on YouTube. Jain, welcome to our webinar.
Thank you very much.
Really pleasure to see you here. So
yes, it's a pleasure being here.
I will start with the first question. Let's just, dive into that. Can you share your background in investing and what initially drew you to the capital markets?
Yes, it took me a while to get interested in investing because where I grew up and in my family, the most important thing I would say as a child and as a young man was to focus on things that were like becoming a musician or a writer, intellectual things or things related to creative arts. And this is the environment in which I grew up. So it wasn't like a normal thing for me to be interested in money or investing or anything like that. I was always very interested in mathematics, but I didn't really know what to use it for. But I got a career in online marketing, and I started getting interested in investing as I started watching businesses that I was marketing, and I started getting interested in what was a business really about, and what does it take except from marketing to create a good business. And I was working on a company that got listed on the Copenhagen Stock Exchange, and I received some stock options from this company, and that's around 20 years ago. And then I really started to get interested because I could sell those options, and I sold those options with a 70% profit. And at that time, which is 2004, 2005, a lot of people started to get really interested in the capital markets because markets were going well and they were going up. And that naturally drew me in this environment.
That's amazing. And you said that you really adore numbers. So I guess it's kind of a good feat, this and that together. Let's go to the next question. Could you elaborate on your investment strategy and how you developed it over time, over the years?
Yeah, so first of all, I focus on big trends. And originally, as I was working in online marketing, I saw that there were some companies coming out of this area, which were the companies now known as Alphabet and Meta, and also Amazon, of course, which were some of the really strong companies within online advertising. And I understood their business model and started investing in them. And that's around 12 years ago. And I saw this is a mega trend that's not going away. So I've been starting out with focusing on what the trends are of the time that we're living in. And then besides from that, I take the best elements from both technical and fundamental analysis. So I think a lot of things in technical analysis does not make so much sense to me and is not useful at all, I think. But one thing that I took from technical analysis that can be used, I think, is momentum. And that makes a lot of sense, the momentum in the markets. And that's something that I use today, even when I pick the stocks that I want to focus on.
That's actually lead us to our next question. So our next question would be, can you walk us through your investment process? So specifically, how do you decide, what instruments to buy, which position to open, when to close them? That, obviously momentum helped with it, but I would love to understand, if you can guide us through the process.
Yes. So first of all, I have some very long-term bets. I actually have three different parts of my portfolio, and the first one is very much focused on those mega trends that would be, in general, the digitalization of our world, which includes AI, of course, and areas like cloud computing and all of those, internet software and so on. And I think these are is a mega trend that I want to invest in. So those companies that are the main the main ones in that area are the core of my portfolio. I also have a second type of investments in my portfolio, which is more value-based, and I do this to diversify my portfolio to not only have a tech portfolio, which is anyway my main focus, and I use 11 different values to screen for the list that could be potential value picks. And then besides from that, I use a manual evaluation to find out which of those stocks could be used for my portfolio. And then the third part of my portfolio is a little bit more short-term, momentum driven, which can be anywhere from a few days to a few weeks, usually no more than 3 to 4 weeks. And those are momentum stocks that I see that the market appreciate on a short-term basis, and I want to be in those stocks because they can have gains of like 50% in just a few weeks. And that has been something that I've been doing quite successfully since like over the last 6 months, and something that I will, sometimes in some areas or some regimes of the market, I will not do it because momentum is not always a strong factor. But during the last period, especially as the markets have been appreciating, I think that momentum has been a very strong factor. So I want to use those short-term trades to diversify my portfolio as well.
Seems like you're quite adaptable to the new changes and things like that. So do you have any insights on specific companies, sectors, or trends you believe will be significant over the next 5 years, and what makes you optimistic about them? Obviously, this is not an investment advice. So as I mentioned at the beginning, it's not an investment advice, but we would love to hear, your thoughts a little bit on the market.
Yeah, so I think it's important when you invest not to forget what kind of period of time we're in and to look at the big picture. So I think that right now we're in the midst of a digital revolution, and it has basically been going on since the 80s with like the development on the PC. In the 90s, we had the internet. In 07, we had the iPhone and the smartphones coming. And this is a digital development that is actually only beginning, in my opinion. It's like most people maybe just see it from the outside. They will just think, yeah, our world is digitalized now. But I really think this is only the beginning of what it can be. And for this reason, I want to invest in this mega trend. And I think it's for the next 5 years, it's certainly a good area, in my opinion, to invest in, as AI and especially generative AI is going to create great differences, great changes in our world. And I believe that jobs are going to, the way you do your job is going to be improved by using generative AI. It's also going to replace some jobs, I think, and new jobs are going to be created. And in general, I just see those companies that are exposed to this trend, and this is also what we've been seeing this year so far, that this is a trend that's certainly going to stay here. It's not without challenges, of course, because now many of these companies have appreciated a lot. So it's certainly at some point going to be volatile, I think. But as a mega trend, this is something that I would want to be invested in, because when you invest in trends like this, there's a lot of dip buying, which means that every time the markets correct a little bit, then there are a lot of people that didn't buy a stock, like, for instance, NVIDIA, that wants to get in. And for this reason, there's a natural flow and a natural trend in these areas. So I think everything that's related to generative AI could be interesting, but you need to avoid the pitfalls of investing in companies that just say they are doing AI or using it as a marketing tactic. So that's certainly something to look out for. It's just like you shouldn't invest in anything that's AI. It certainly pays off to be picky. And then everything that's related to digitalization of our world, which is cloud computing, semiconductors, cybersecurity, are some areas that I see performing very well in the next 5 to 10 years.
Okay, interesting. So you're basically saying that for the AI and this kind of sector is using more fundamentals.
Yeah, I would say I'm using fundamentals, but it's not like in the typical value investor sense, like you need to see a good PE value or something like that, because you need to realize that these companies are growing a lot. So sometimes when people say they are expensive, they're not really factoring in the huge growth that you're seeing in some of those companies. But I'm certainly looking at the cash flows to see if it's a valid investment and if it's evaluated too high at this point.
Okay. Sounds really interesting. So I would go to our next question. It's kind of, let's just be real a little bit over here. So investing can be challenging, and everyone encounters setbacks. What was, your biggest mistake, and what did you learn from it? That would be like the first one, and then obviously it would go to, to the other side as well. Yes.
Okay. So yeah, well, during the financial crisis, I was invested in stocks because I started just a few years before, and like many other people, I lost money during this period, and I think that was a good learning experience, but also something where I made a few mistakes during that period, because I think my mistake during the financial crisis was to lose interest a little bit, in the sense that this is actually could have been an opportunity to lean forward and buy more stocks, and actually using the low levels of valuations during the crisis. But as many other people, and I'm seeing this today when I see new investors coming into the market, is that when they lose money, they also lose interest. So I think my main mistake at that point would be that I lost interest a little bit, and I only picked it up 3 years later, where I started day trading and swing trading and got interested in that. So that was the key mistake, to not just lean forward, and even if I was losing money, to just invest more. That would have been the right thing to do.
Yeah, so you believe consistency and just like keeping forward even when everything looks a bit shaky. Okay.
Exactly. Yeah.
Interesting. So additionally, let's go to the upturn of this. Which specific investment are you most proud of, and why?
So I've been investing in some of the mega caps, the ones that are the mega caps today, like Alphabet, Meta. Alphabet I invested more than 12 years ago, and a lot of people told me that I shouldn't invest in large companies. I should rather try to pick small companies, because those companies are going to appreciate more. And I'm proud of that. I stuck to my own belief of saying, I think that this is a company. It may be very large. Alphabet was a large company at that point, but I think it can get much larger. And actually, it has surged more than 1,000% since that time. So I think one thing that's important to me is also not only to pick the right stocks, but also to keep them even during times of crisis. And that's what I'm proud about, to having picked out those stocks at a pretty early time and just keeping them for a very long time. Even before I was on etoro, I was investing in those stocks. And I think that's key to doing something really right in investing, is to pick the winners, but also to stick to them, and try to ignore the noise around what the people would be telling you, or the headlines would be scaring you about what is going on in this company.
That's funny, because it's actually leading us to our next question. So obviously emotions play a big role in investing. How do you handle them during a bear market, for example, a big breakdown, let's say in a specific investment?
Yeah, so from a young age, I've been playing games at a very high level. I was playing elite chess, and I played against some of the best people in my country from a young age when I was a junior. And one thing you have to be very aware of when you play games against strong players is that when you're under pressure, you cannot break down psychologically. You cannot, be mentally unfit to take this challenge. You may be a good player, but if you can't handle the psychology, then it's not going to go very well. So I've been used to this kind of, you can say, pressure of meeting very strong challenges through game playing. Also in Scrabble, where I was the Danish champion 4 times. Sometimes when you play Scrabble, you don't get the right tiles, and that's actually something that can be very depressing. But if you let this get to you, then it's not going to go well. So what helps me in those games is that I say that I try to play this like a computer. I just find the best move every time, and I try to do it mechanically. And basically, it's the same you need to do in investing. You need to try to detach your emotions from your trades. Like even when you're losing, you need to take the right decision still. And I can exit like positions where I've lost money, and I can do it without many feelings because of this background that I have. So I think that has been very useful. But one thing that's challenging, of course, is that I have a lot of copiers, and those people that are copying me are understandably very emotional about what's going on in the financial market, perhaps because they have a shorter experience than I have. They don't know the ups and the downs of the markets. And for this reason, that can be a bit more challenging for me, because I have more than 15,000 people saying to me different things about their emotions. And obviously, as I'm an empathic person, I try to respond to that. So that's a bit more challenging. I don't have so many problems handling the markets myself, but I can see that copiers are having some challenges with this.
So you don't have only to manage your emotions, but also the copier's emotion, which is a bit tough, as I understand.
It is.
But I think that's why we have this kind of webinars. So I think it's important to talk about risk management. How do you approach risk management in your portfolio?
So I do a few different things. First of all, I usually try not to open like one position with more than 6 to 7% of my total portfolio, which means that if some investment that goes really bad, then I will never lose too much on it. So that's a very easy way to do it. The second thing is I have over 50 companies in my portfolio, which means that I'm very diversified, and I try to have a portfolio that doesn't have too much volatility, but still performs better than the overall market. And so my drawdown for the last 12 months is a weekly drawdown is only 3.6%, which is very low. So I try to keep it at a minimum, not only for me, but also for the copiers, because I think that people get very emotional if the volatility is too high. So I try to do a good risk-adjusted performance, and I think that's key to being a good popular investor as well. So second thing is that I try to evaluate my trades. Like if I'm 10 to 20% down on a trade, I'm open to the possibility that I could be wrong, and I think you should be as an investor. So like I might be wrong like 30% or 40% of the time, and if I'm wrong, I have to get out of this position. And I think a lot of people, if they have too inflated egos, that's something that's very difficult for them to do. But for me, it's not so difficult to get out of a losing trade, because I know that I'm going to be wrong, and that's just part of the game, in my opinion. So I need to let my winners run for a very long time, and then I need to take the losses and make them as small as possible. So that's another way of managing risk.
Okay. So just let's sum this up with this question. Do you have any messages or advice you wish to share with the investors watching these? Obviously not financial advice, but overall advice.
Yeah, so investing in stocks is risky. So you have to be ready to lose basically like 50% or even more of your investment when you invest in stocks. So that's the first thing to know, that if you're investing at the worst possible time, this is what could happen to you. So you shouldn't invest with money that you cannot spare for a few years at least. Usually, I would say that you should have a time horizon of at least 3 to 5 years, because if you invest only for a few days, then you're going to have a 50-50 chance of being profitable. But if you invest for 10 years, then this profitability, the odds of being profitable is going to be up to 94, 95%, at least if history is any guide. If you look at the history, that's what the odds would tell you. So obviously, past performance is not equal to future performance, so that's important to say. But it just tells you that the longer time horizon you have, the better are your chances of being profitable. So that's a key thing to understand. And also, I think if you're buying stocks yourself, you should try not to bottom pick on, let's say, small companies that have lost 90% in value, because you may get to invest in a company that's actually going bankrupt. So you should rather invest in strong companies that has good momentum, and you can see that the market likes those companies. And I think that's important to say if you're investing in stocks for yourself.
Amazing. Thank you so much, Christian, for taking the time to speak with us today. I just want to remind everyone to subscribe again. I know in our channels, make sure to like or subscribe. We're going to be here and make some more sessions like that. Thank you very much, Christian. Thank you everyone for attending this webinar. Really, really hope to see you in our next session, and have a great day.